Hello, everybody. My guest today is Alfonso de la Nuez. He's the co-founder and co-CEO of UserZoom, the experience insights management company that helps businesses design, measure, and deliver the best digital experiences. Fortune 500 brands like Google, Amazon, AT&T, Walmart, and Intel power and automate the UX and CX research of all their digital properties through UserZoom's agile and scalable platform. He's got 20 years experience in the fields of marketing, web, design, and user research. Alfonso, you ready to take us to the top?
I am very happy to be here. Thank you for inviting me.
All right, you bet. So super crowded space. It sounds like you're sort of monopolizing the Fortune 500 brand space here. Did you come from a Fortune 500 brand?
Not really, to be honest with you. Well, I guess my first job was Dell Computer. So maybe, I don't know if you would include them there, but yeah, it was a 2-year out of school experience. And then right after we went to smaller companies.
Okay, fair enough. So give us the origin story here. Again, you're playing in a crowded space. We'll get into the products here in a bit, but take us back to year one. When did you guys launch?
2007.
Okay, 2007.
The background of the story is we actually came from the old school way of doing user experience research and experience insights management, which was in a physical lab. And I don't know if you've ever participated or seen, one of these kind of focus group like research projects and studies where you sit and you do kind of one-on-ones in a physical lab with the one-way mirror. You have some people observing what's going on. That's what we did in the first startup that I started back in 2001. And so UserZoom is born out of kind of like software is eating the world for user research, right? So we wanted to automate and scale the research, the tedious process of doing this type of user research. And that's why we built the product. So UserZoom is kind of like right after that experience.
First 100 customers, first million in revenue is always the hardest. Did both those happen for you in 2007 or did it take a little bit longer?
No, it took a little bit longer. Of course, the crisis hit in 2008. So that was a tough year. And initially, to be honest with you, we bootstrapped this business. And the way we were kind of getting the MVP in place and kind of growing is through the profits that we were making with the previous consulting company. So we had like a couple of years of both businesses together. And no, I don't think we hit 1 million probably until 2011 or something like that.
Mm-hmm. The agency to SaaS model is in the DNA of a lot of the most successful SaaS founders today. So I always like to dig a little bit here. What year did the agency do the most revenue and how much revenue was that?
I think, if I'm not mistaken, we had a $3 to $3.5 million agency model before UserZoom. And then within UserZoom, it must have been $500,000 or not even that. We went quickly into as soon as possible, we moved over to SaaS.
Yeah. So what year was a 3.5 million? Do you remember?
Oh, but this is again prior to UserZoom, right? This is the previous startup. This must have been 2006, 2007.
So how did you have the conviction to shut down a $2-3 million revenue stream to go on to SaaS? That's where most folks who are going to be great SaaS CEOs eventually, they get stuck in the agency because they don't want to give up the sunk cost.
But I thought it's a great point that you're bringing up, Nathan. And to be honest, one of the reasons I always say we were successful is because instead of just jumping into a SaaS model and building an MVP and trying to finance that, it was a very, very tough time for about 2 to 3 years to keep both businesses kind of running parallelly. And, it helped us finance the MVP and also helped us do actual market research because we were working with customers that needed this type of insights. And we were working in a lab, but at the same time, we were working and offering them a product to do it remotely, do it online like it is today. And so it was very tough, I got to say, because on top of this, we also had it in different markets. One was in Spain, where UserZoom was born, and the previous startup as well. And the other one, obviously, is the US, where I moved over in 2009 to roll out the US market. So very, very complicated, very tough thing to do.
Interesting. Now, how many customers are you serving now today on the SaaS model?
About 1,000.
Okay. And here's my big question. Some of the larger SaaS companies at scale, against their VC's wishes, because of the margin hit you take with professional services, they will touch big accounts with sort of agency-like services. And you see typically net dollar retention on those touched accounts go through the roof because there was a big setup. So you agency guy to SaaS, you raise VC now. Do you put touch and big agency contracts as setup fees on these accounts?
We look at the professional services and the consulting we call it actually managed services at UserZoom as a real value to our customers. And it is true that those customers that use us for both product or they license our product and use us for professional services actually have the highest retention and the highest net retention. Yes. However, it's also related to the maturity of the market. Some customers just need that, and they need hand-holding, or they need, we actually provide more of a advisory type of services. We help them. We always say we help them fish versus fish for them, right? We enable them and teach them how to fish. So we found that in the beginning, we dropped the agency model, so to speak, or the consulting completely because we didn't want to go back to it. Over time, we learned how to manage it with a good gross margin, by the way. So it's not, first of all, it's only about 20% of our revenue is coming from, other than license, other than product subscription. And second of all, we're doing a good job at selling the value and getting some good margins from it as well. Sorry?
What's good margin on managed service?
Well, I mean, back in the day for us, it was like a 20 to 25%. But right now in UserZoom, we're sitting at close to 30%.
Wow. Okay. Interesting. 30% margin.
Yeah.
That's interesting.
And growing and growing.
That's impressive. Yeah, it's impressive. Okay. So help me understand if I'm going to sign up, if someone's listening right now, they're an enterprise brand, they want to sign up for UserZoom. On average, what's a customer going to pay you to use your tool set?
Actually, we've gone down market because initially we were really focused on the enterprise, and so most of the customers in the enterprise are somewhere in the 100 to 150,000 a year, and growing, by the way. But then we have this other cohort. We acquired a company called Validately a couple of years ago, and they were actually focused more on the SMB and a kind of a different persona. So we go all the way down to below $12,000 as well. Right now, I think if you look at overall business, it's sitting somewhere in the 80,000 or so
per year.
Yep.
Interesting. Okay. And I want to sort of capture more of the story. So usually what people do is they start SMB and they move enterprise. You sort of the opposite. You had enterprise
yes.
and you're moving down now. And so, if you're moving enterprise and moving down, obviously the enterprise, you should see some obviously really healthy net dollar retention. I mean, are you guys above, if you look at the whole business on a dollar basis, are you above like 130, 140% net dollar retention last 12 months?
More closer to 120. Yeah, we're around 120. Depends on the cohort once again, Nathan. Yeah. If you look at some cohorts, the enterprise, some of them are around 130, 135, the very large ones. And then the others are lower, right? So overall, total is about 120 right now. It's really good.
So you want to basically, invent new mousetraps at the top of your funnel to bring in smaller sized customers, right? And then obviously expand them and excel them across your other product lines. What mousetraps for you right now are working the best to drive more top of funnel product wise?
Well, what we want to do is we know that there is an SMB market that doesn't require the bells and whistles and the advanced features that we have for the enterprise. And they just want to do some basic interviews, kind of like what we're doing right now. We have a product that, it's kind of like a purpose-built Zoom for research, for testing, for interviews. And then we have others that are, unmoderated. So without somebody just, asking questions. And maybe they just want to run some quick, studies with 10 users or 10 participants. And they don't need a lot of, again, the advanced or bells and whistles that you add when you have behavioral data or surveys and logic and condition and a lot of things that you need for more quantitative analysis. So those products are ideal for SMBs or for immature customers that don't want to pay, they don't have the budget. The enterprise wants something more like an XIM, right? Experience Insights Management solution and platform that gives you all sorts of different types of research methodologies and insights related to user experience and customer experience and so on and so forth.
Yeah, surveys, interviews, live intercepts, usability testing. You sort of touch on all these things with your current product line.
That's right. Yep.
You are taking an aggressive acquisition approach in terms of buying other companies. We'll talk about that in a second. Talk to me about how you finance the business. So from the agency revenue, how long were you able to stay bootstrapped?
Well, actually, we started doing SaaS pretty early. So even though we did have the agency, if you look at UserZoom only, it was a couple of years. And then in 2009, we started selling a whole lot of licenses. Okay. And that was very much pure SaaS. So I would say your question was how many years? I think 2 to 3 years until we started really seeing growth in SaaS, and we felt like we had a SaaS business for real, versus a hybrid.
So when was the first fundraise that you did?
Oh, well, so we raised friends, family, and fools, so to speak, back in 2007 and 8. And then we didn't, and that was about $1.5 million altogether. And then we got the company all the way to about 12 million in revenue, 15 million in bookings. Well, it was 2015.
Okay.
The first few years, Nathan, I mean, after the crisis and trying to figure out product market, I mean, the first 3 years really were just testing waters, right? It started getting interesting around 2011, 2012. And then we grew. And the most important thing, we grew profitably, by the way,
Wow.
yeah, we were actually 14% EBITDA profitable in 2015. And that's when we raised, sort of a first round that was fairly large, which was $34 million with Sunstone partners.
And that's a big moment. So 34 million raised in 2015. Why was Sandstone the right partner?
Well, they've been following us in our trajectory. We had good culture fit. Gus Albarelli and I had been talking for years. And, I think, honestly, they believed in the market. Because today, everybody will say, oh, experience insights and UX is important for products, of course, and customer experience. But we're talking 2013, 14. These were still very, very early years, right? So Sunstone was a boutique firm, a boutique private equity that came in and said, hey, guys, we believe in this market. We believe in the team and the opportunity. Let's do it. And we had a wonderful few months of conversation until we finally closed the deal.
What valuation was the 34 million raised at?
Well, so this is the story about this. This is approximately about 50 million. The idea there was that
pre-money, right?
Yes, no, post. So they actually did a majority.
You sold a big chunk then.
We did a majority, yeah. And we explained this openly to people. Think about this: we are 3 founders coming out of Spain, hustling like crazy and being able to build a company all the way to 15 million. And again, cross-border. So I'm the only one that came over to the US. My 2 co-founding partners and the whole engineering team stayed in Barcelona. Wow. So it was very tough. I think we did something amazing, and I'm very, very proud of that. By the time we got to that 2015 year, we knew that we had to raise. We knew that we wanted to grow a big business. And Sunstone came in and said, look, we can give you a smaller check and continue going, or we can give you a bigger check, use some for secondary. The investors and the founders, you guys deserve, some to take some money off the table, and we'll help you continue growing. My co-founding partners who were in Spain, they felt like they were gonna, the company was gonna change completely, including myself, right? So we felt, this is a good thing to do. It was a good story, and I always say that, it was not a complete sale. It was a majority investment, which is very different than selling. And Sunstone has never really operated or worked in a way that this is our company, we're going to do whatever. No, we actually partnered with them the same way. That is, if we had partnered for a 25% or 30% of the business.
I'm a big fan of secondaries. I think it's a great way for founders to take some liquidity off the table, early employees as well. But a lot of people don't understand how to structure it or how to think about it. How much of your 34 million was secondary?
Oh boy, I want to say about 70% of it. I don't remember right now, but it was a good chunk. Yeah, I mean, like the investors, the family office that came in from Spain, and the business angels were very happy.
Yeah. Now, did the angels? I assume you basically said, "Here's an exercise price, angels. If you want to take it, take it. If not, you'll stay on the cap table." Or did you force them to take the secondary?
To be honest with you, I mean, force is a big word, but everyone was so happy, and there was a good deal for everybody. I think only one stayed, which I think was my brother who had invested early on, but everybody else. The idea was really to recap and kind of start fresh, Nathan. We wanted to start fresh with a company that had a headquarters in California versus Barcelona, a new board here, but yet Spain and the Barcelona team have remained absolutely critical for the success of the business. So really, it was just a necessary step to professionalize the business, and we were all very happy with it.
2015, you break 12 million in terms of run rate. Where are you at today?
We're actually in a run rate of 80 million.
Okay.
So we did about 50, almost 52 last year, and with the run rate is 80 right now. Obviously, the valuation, I don't really want to talk about it, to be honest with you, but it's I would say, clearly more than 10 times what was back in 15.
That's a big moment, Alfonso, right? I mean, more than 10. I guess maybe it's not, right? So, I mean, you tell me if you can share this. Are you part of sort of unicorn club? Have you passed $1 billion valuation yet or no?
No, I don't. I think we'll get there pretty soon. I'm very confident, and it's very exciting, of course. But no, we're not there yet. Let's be realistic.
No, that's fine. That's fine. Now, have you? I think you've raised additional capital on top of 34. What was the last fundraise?
Yeah, we just did this one that was on the news. We actually closed it around December 2020. It was about 100 million. Yeah, the idea there was that we have a big market opportunity ahead of us, and so Owl Rock came in and said, "Hey, we want to be part of this journey. We love the team, we love the vision, we love the market." Yep. So they came in, and I can't give you much details around exactly what the 100 million was about, but I can tell you that some of it was also used to get back return the return on investment for Sunstone, and some of it is obviously for us to grow. But yeah. I can't give you the details on that.
No problem. Look, I mean, you are in a space where if someone could be a hub, there's a lot of spokes to go acquire, right? I mean, if I just look at your live form feedback, you have bootstrap companies out there, Question Pro with some scale. You've got sort of Typeform, which is grown pretty effectively in terms
out of Barcelona.
Out of Barcelona, very effective. I mean, am I going to be interviewing you in a year and all of you guys are coming together and you're going to have 300 million of private ARR and you're going to be looking at SPACing this thing or something, or what?
Yeah, I'm not so sure about that. I do believe, and yes, you've seen our M&A record is actually pretty good. We've done four with the Enjoy HQ recent deal. We believe that there is an organic and an inorganic way to grow. And this is a very fragmented market. So we think that there's a lot of point solutions out there that could be part of our platform. We have both. We have both the collection, the data collection, as well as the analytics within our platform. And then let's not forget the whole panel and sourcing business that we also offer. So it's a very broad solution. Within those three buckets of collecting, sourcing participants, and analyzing the data, there are tons of little companies out there that could help. But to be honest with you, right now, we're very focused on what we did with Enjoy HQ because we think it's a phenomenal fit for our vision of providing a broad experience insights management solution. And we're going to be focusing a lot on that for the next year for sure.
I'm going to wrap up here with some quick questions. Total team size today?
About 300.
And how many engineers?
About 80 to 90.
How many quota carrying sales reps?
Somewhere around 50.
True or false? That's a key way for you to drive growth. They have expansion revenue targets and they're hitting it.
Sure.
It's a key.
We are the vast majority of our growth comes from expansion.
Yeah. Yep. That makes a lot of sense. So you said 120% in your top cohort in terms of net revenue retention. Peel that onion for us. What's gross revenue churn look like?
Gross revenue is somewhere in the gross retention is somewhere in the 86.
Okay, got it. So then you're expanding 34% to get to 120 together.
Yep, expanding quite a bit.
Really impressive, very impressive. Okay, let's wrap up with the famous five. Number one, favorite business book?
Good to Great by Jim Collins.
Number two, is there a CEO you're following or studying, Alfonso?
I follow a lot of them, to be honest with you. It's impossible. It's like picking one of my kids. But, I really liked Richard Branson, his style and his inspiration and his positivity.
Besides your own, what's your favorite online tool for building UserZoom?
UserZoom.
No, besides your own.
Well, we use UserZoom to build UserZoom, and it's our main source of insights, of course. But no, I mean, we clearly love all the cloud, collaboration tools. We love Google and Slack, and a company called like Chorus also is doing a phenomenal job for us.
Okay, great. How many hours of sleep are you getting every night?
I'm good with 6.
Okay. And situation, married, single, kids? You mentioned kids.
I'm married and I have 2 kids, one 13-year-old who was born in Spain, in Madrid, and is a boy. And I have a very American 5-year-old girl.
Busy guy. How old are you, Alfonso?
48.
Last question. What's something you wish you knew when you were 20?
I think culture eats strategy for breakfast.
Guys, there you have it. UserZoom launched out of an agency that did 3.5 million back in 2007. They scaled, finally broke that $1 million run rate in 2011 when they raised from some family and friends prior to that. Then the big year in 2015, break a $12 million run rate, do a $34 million raise at a $50 million valuation. It was a majority sale, majority investment, but now they're scaling rapidly. Past $52 million in ARR last year, now at an $80 million run rate. Brought in another $100 million from a new partner at more than a $500 million valuation. Has looked to scale in the space with their team of 300. 100. Alfonso, thanks for taking us to the top.
Thank you, Nathan, for having me.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.